Yo, what is good, boys? Zoran Trades back with another banger, and today I'm going to be telling you guys why your IFVG setups are losing, or probably are losing, because the chances are you didn't click on this video if your IFVG setups are winning. And I'm just going to basically tell you guys what I wish somebody had come to me and told me about six or 7 months ago. Because obviously IFVGs, any trading strategy that you can use is going to have winning days, even if you're completely applying it wrong. Because there's still a 50-50 chance of the price delivering 50 points to the upside or 50 points to the downside. But when you're actually developing your edge, there's certain things that you need to take into account, which actually make it so that you're applying your strategy properly. And obviously, any bullish fair value gap getting inversed is going to be a signature or a symbol that price is trying to push to the opposite direction, aka the downside, and inverse vice versa. But ultimately, there's certain inverse fair value gaps that it needs to be that you're taking your entries off for the probability and the high win rate of this model to actually play out. So, excuse me, a few things that I just want to get out of the way. Not all IFVGs are created the same. Not all IFVGs are only valid in the manipulation leg, and not all manipulation legs are created the same. So, one more time, not all legs are manipulation legs, not all manipulation legs are created the same, and IFVGs are only valid in manipulation legs. So, what does this mean? First things first, IFVGs are only valid in the manipulation leg. This means that in the actual leg that sweeps our PD array or our high or our low or whatever it is that we're trading off of, or our fair value gap, that individual leg is what we need to see getting inversed, not the whole move leading up to that leg getting swept. And oftentimes these actual manipulation legs are only visible on the 30-second, 1 minute time frame. Because if you even stay on the 3 minute, either it will close your gap, or you will see that there's a lower gap that you're then supposed to have been either targeting or using as a break-even point. Because usually what happens is the actual IFVG that does play out is going to be between the 30-second and the 2-minute chart. When you see a 5-minute manipulation leg, that's very rare, because you're going to actually see price super strongly deliver for a series of 10 candles or something, right, with no pullback, which just generally doesn't happen. Most of the time, we're going to edge towards our PD array, stop, maybe make a 5-minute gap, and then sweep that PD array, leaving a 30-second, 1 minute, 2-minute IFVG, right? And then what you're supposed to do is take that 2-minute IFVG and then go break even in the 5-minute gap, or target the 5-minute gap. You can't wait for that 5-minute gap to get inversed, because by that time, your target's already probably going to be hit, or your risk to reward to your target is just not going to be there. Next off, not all legs are manipulation legs. Again, if this is, and I have a better drawing that I made for you guys, I want to show you guys this. If this is our high, right, and we're moving like this, we push up, come down, and then push up again, right? Here, that was our manipulation leg. This here, this final push into the high. Not this whole move here, right? Not all of this with this 5-minute gap down here and everything, sorry. Here we go. It's not all of this that is our PD array. Is our manipulation leg. It's actually just this little leg that actually stopped. We moved higher, stopped, pushed into price, and that little sensitive point, the manipulation leg, is what you want to see get inversed. Because if it does get inversed, that proves to us that it was a manipulation leg. Because the way price works, what are we going to do? We're going to rebalance. We're going to sweep highs or lows and then seek to rebalance inefficiencies. So that means that after we sweep this high, this leg here shouldn't actually be used to go higher. And if it does get used to go higher, so tapped into and then not inversed, we know that the level that we just anticipated a reversal off of is no longer going to be valid. Because why? It's not inversing our manipulation leg fair value gap. And this is going to do two things. What this is going to allow you to do is, now in this situation, this is a strong low here. You could play this trade like this now. Let's just say we have a 5-minute fair value gap here. and your 1 minute inversion here, right? What you can now do, you can go short once this gets inversed. And not only do you have decent risk to reward to this low here, but you can go break even inside this 5 minute gap here. So once price sweeps this gap, which it should do either way, regardless of us continuing bearish or bullish from this point, you are able to go break even in this zone that we know should get hit. And if we truly are bearish and continuing to push lower, we should just fully disrespect this 5 minute gap and push straight into this low. Either way, you're protected, you're safe. If you wait for this 5 minute gap here to get inversed, 3 things happen. First of all, your risk to reward to this low is just not there, right? That's just not there. You can't keep your stop at a protected level and then target this low. That's like a, 0.2 R. Second of all, what this does is it decreases the probability of your trade playing out, because after this low here gets swept, we don't necessarily expect price to deliver too much further. And yeah, you could go break even there, but you've then missed your entire setup. And also, what this does is if your stop loss is 100, 200 points, you realize how far you need the market to deliver. Whereas if your stop is 30, 40 points, you can just trade to the next swing high or swing low. And that is actually how your trade's supposed to play out. Because when I figured this out, I went back on many of my trades. And what I saw is that oftentimes I waited for this 5 minute here to get inversed, where I could have been break even already or out. Instead, I entered here, put my stops at some random level and just tried to target the momentum, which obviously just simply isn't going to work because I'm not entering, my entry isn't anywhere protected, right? This zone here, after we make this inverse fair value gap, this zone here should not, this is a breakaway zone now. If price retraces into it, it should do this, which means that if my stop loss, if I entered here and my stop is above that whole zone, I'm fully protected. I have a protected stop loss, and the next price objective should be this low here, which is in turn a perfect trade. But what I saw myself do very, very often before I learned this was wait for this whole 5 minute to get inverse, which, okay, because it takes longer and it's like a higher time frame confirmation, it does feel like the safer, more profitable way to play it, but it's just simply not the case. The chance that the probability of you having 3 5 minute inversions in 1 week is just low, right? Especially if you're trading PB model or Dodgy's model or something like that, because the chart generally doesn't manipulate into one direction for that long. It's small legs that you want to see get inversed, because a 5 minute gap is pushing into a higher time frame PD array, right? People, I included, but people take trades out of 5 minute gaps. That's a whole trade idea. You don't necessarily, unless you need to, wait for that to get inversed. I'm just going to show you guys what this would actually look like on a chart. So again, here, this is an example. We came down, this is a drawing. We put this high in here, buy side liquidity high. That's now our target. We come lower. Now let's just imagine here we sweep out previous day low. So now we're pushing higher again, right? After we push higher, here, we leave this 5 minute fair value gap, let's say, okay? This gets left behind. We then push higher, stop, come down a little bit, and then make this small up and down move into the high, right? That small little move there. If you don't know, what are you going to do? You're going to wait for this 5 minute here to get inversed. And then you're going to go short here at the bottom of the move, stop loss all the way up here, and then you have negative risk to reward to this low, right? You have negative risk to reward to the low, just to keep your stop loss somewhere protected. Or what you do, what you're actually supposed to do, is wait for this small manipulation leg here to get flipped. Because what you actually will see is once this here got flipped, we could have already gone short there. And then you can either target this 5 minute gap, target these lows, take partials at the lows, and it just completely changes the entire risk to reward of the trade, along with how much of price you actually need to see deliver in one direction for you to be right. And this is literally like the number one thing that I was struggling with IFVGs. Like almost every single setup that I would take was a 5-minute IFVG or a 3-minute IFVG, where that's such a rare phenomenon. Like usually what's going to happen is on the 30-second chart, we're going to edge the high, pull back, push higher, make the inversion on the 30-second, 1-minute, 2-minute chart. And when I started doing that and then matching that with pairing that with being more selective about the entries that I'm actually taking, my win rate literally skyrocketed. Because the chance that, like, you have to realize the whole trade idea is only based off the fact that we will hit this 5-minute gap or that we will hit this low down here. It's such a rare circumstance that you will see us sweep your high that you're trading off of and then just deliver to the complete other side of the range. Like, that's usually not going to happen. What's going to happen is you have a small range, maybe 50, 60 points, where you have a good idea price is likely to deliver to your high or your low or your gap. It's not very common that we're going to see, okay, prices just swept a 1-hour gap and a high, and now it's just going to dump 350 points. Like, that just, it happens, but it doesn't happen to the point that you can build a 70% win rate model around it. What you need to be doing is finding these smaller time frame manipulation leg inversions and then just being really selective about it. Really only taking it when it makes sense with context, makes sense with the liquidity sweep, and it makes sense with your risk to reward to your draw. Because again, it doesn't matter how right you are about where price wants to go if you aren't entered in a position to be right about that. That's like betting on a soccer team and you know they're going to win, but your bet isn't set up so that if they win, you make money. It's like they have to not only win, they have to win by like 10 goals. You just can't do that. You need to either position yourself so that if your bet is right and your team wins, you make money, or it's nothing. It can't be a little bit of both, right? And that's just the main thing that changed my IFVGs a lot and my entries. Because again, this fair value gap here is no manipulation leg gap. Like, what you will find is once this gets inversed, we still put in another bearish 5-minute gap, retrace into that, and then only push lower. And within that bearish 5-minute gap, there will be a 1-minute or 2-minute IFVG that you could have taken that will literally give you better risk to reward to your draw on liquidity than just waiting for this higher time frame inversion. And on top of that, please, I don't want to hear or see anybody taking a 15-minute inverse. Please, I beg. We use higher time frame inversions to tell where price is going. Like on the hourly time frame, if we've inversed to the downside, that's gonna add to my bearish bias. That's not gonna make me just go short, because what, am I gonna have my stop loss at the high of the hourly candle? No, I'm not. That's 200 points. I can't do that. But 15-minute, 30-minute, 4-hour, 1-hour daily IFVGs, you don't enter off of those. You just use them for your sentiment of where price is actually trying to deliver to. But 5-minute is the highest, and generally speaking, you want it to be 30-second, 1-minute, 2-minute, 3-minute. And I know you're probably thinking 30-second, what? That's such a small time. I know it is, but those levels are very sensitive. And if you are able to catch it at the right time and understand, like, get the conviction that we're actually going to deliver to this high after sweeping your low, for example, you don't need to be waiting for the higher time frames to align, because what will happen is by the time your higher time frame is aligned, your TP is already hit. You don't have time to align it. You just need to backtest that and get your conviction in it. But ultimately, you need to be entering on the more sensitive IFVG so you can actually get a good risk reward to your draw on liquidity. And I'm just going to show you guys an example of what this looks like on the chart. So here, for example, right? This is now on the 2-minute. But if I open the 1-minute, we should be able to see it too. Here, right? In this situation, we have this gap here. Okay. What does price do? It pushes up, creates a low inside this gap. And then after creating that low, we have a completely new manipulation leg higher, right? And in this circumstance, the inversion inversed both manipulation legs, right? So here, if that was your entry that you decided to play, it inversed both of these gaps. But you didn't need it to, right? We didn't need it to inverse this bottom gap. We only needed it to inverse the top gap, because you guys can very clearly see here what happens. We push higher. This is a manipulation candle. We can clearly see it creates a fair value gap. It's a, 40-point candle or something. Yeah, 40-point candle, 50-point candle. Clear, strong, two big body candles right after each other. That's manipulation, right? Into this 5-minute gap, which there was a 5-minute gap here. So that was our first manipulation leg. And now something very interesting happens here, which I actually had to figure out myself. Nobody ever taught me this, and I'm about to put you guys onto it. After we sweep this 5-minute gap here, and it doesn't deliver, right? We try to inverse this gap and it can't. After that happens, our PD array is no longer the 5-minute gap. Our PD array now becomes this 5-minute intermediate term high that got left behind inside the 5-minute gap. And I know it's weird, like it doesn't actually make sense, but it's the case, right? Because either we flip this or we resweep the high. And if we resweep the high, that's where the liquidity is going to lie. It's not going to lie in this gap here or what we previously swept. So if we check here now, we pushed up, put in this 5-minute high here, came down. Now the 5-minute gap was mitigated now. So it's no longer a trade idea that we can, or a fair value gap that we can base a trade idea off of. But what happens? The 5-minute intermediate term high is now a level that we can see a sweep off of. So this 5-minute intermediate term high here gets swept, which is now our new PD array. And for my newer traders, a PD array is just PD stands for premium and discount, and it's just either a group of ICT concepts that you will find in premium or discount. Like for example, in this range here, we have a fair value gap down here, which is a PD array, for example. But now, after this 5-minute gap here gets swept, our PD array is no longer the 5-minute gap. It's now the intermediate term high inside the 5-minute gap. So, of course, in this situation, when we did end up inversing, it inversed both gaps. But we didn't need to see that happen. We could have literally just seen it close right here. And bang, could have gone short and targeted this low. And that is where your risk to reward is going to come in. Because again, in this situation, we didn't deliver that sharply here, so it didn't leave behind a 3 or a 5-minute gap. But what will often happen is this zone here will leave behind like a 5-minute gap. And then we resweep. And if you don't know that this is now our new PD array, this 5-minute high here, if you don't know that, and you're still basing it off the trade idea from this gap, it looks like this was the leg that swept the gap, so you need to wait for that to get inversed. But that is not the case. You need to wait for the leg that sweeps the 5-minute intermediate term high, or whatever high that gets put in at your PD array. That's what you need to see the inversion off of, and that's why your risk to reward is going to get a lot better through doing that. And also another thing is SMT after that. You guys want to look out for that too, because oftentimes we say we sweep a 5-minute gap. It looks something like this. We come back up into a zone, maybe the high up there that we want to see swept. We see this, right? And then we start inversing. And then we push higher and re-inverse, right? So now, what did I just say to you guys about the PD array? After we sweep a high or a low or a gap, and that leg doesn't get inversed, that high or low that we just put in becomes our new PD array. So here, this is now our buy side liquidity that we're looking for a trade out of, right? And here, if we're looking for this, if ES comes up and sweeps this low high and puts an SMT in it, and then NQ doesn't sweep the high and inverses this gap, that's a trade for us right there, because it's basically as if we had gone up and reswept the high, which is the same circumstance that I just showed you guys on the chart, right? It's basically the same thing. So once we sweep the level and we're struggling to inverse, this high here becomes our PDRA. And if we sweep it, or ES sweeps it, and then we inverse from that, that is also going to be, again, how you guys are going to be able to find that proper manipulation leg. Because that's what you want to do. When price delivers really strongly to a PDRA, and then it's almost like there's 4 different fair value gaps inside the leg that you want to see get flipped, and now there's a 1 minute here, 2 minute here, 5 minute there. Just wait, because you'll probably find that now they've put in new buy side liquidity for us, and we're just going to resweep that liquidity so that we can find our trade, like here, right? You could have waited for this to be a 5 minute and then waited for the 5 minute inverse. And what happens if you waited for the 5 minute to close? Your stop would have gone up here to be protected, and you would have gone stopped out at break even, right? And that's exactly it. I just want you guys to go back test this. I want you guys to just try it out and tell me what you think, because you guys, that's the main thing that really changed my trading, when I realized how sensitive PDRAs actually are, and that you have to go onto the 30-second and 1 minute time frames to really see where we are truly displacing out of, because there's such a much bigger story told in this little part of the chart here than if you just stay on the 3 minute or the 5 minute chart, because you will miss the move. If this was one big 5 minute gap here, let's just imagine this was one big 5 minute gap somewhere in the middle, right? Like here, let's just say. The chances are the 5 minute didn't close here. What time was this? Oh, okay, well, it actually did close there. But chances are when you're waiting for a 5 minute fill, you're going to get filled somewhere like down here, right? And that risk to reward just isn't going to work for us. Like, okay, we got lucky here and it delivered 100 points. But generally speaking, that's not going to be the situation we will find ourselves in. So yeah, boys, I hope that was helpful. Again, I really just want you guys to go back test that. And you guys, the problem is though, you can't just take any now, go take any 1 minute and 30-second IFVG. But when you have your level, you have where you want to see get marked out, you have your targets and you have everything, backtest it, check it out, check out what actually happens, because you will find that the PDRA is far more sensitive than you were giving it credit for, and that if you wait for that higher time frame inversion to play out, the chances are you're gonna miss the move. And the chances are that if you go back over your trades that you've been seeing or been taking, and there are higher time frame inversion plays like 5 minute, even 15 minute, God forbid you guys take 15-minute inversions. But if you guys check that out, you will probably find that there's so many setups that you could have easily taken profits on, where you only got in too late, even though you knew exactly what was happening. But yeah, boys, that's it for today. Last little recap of what I wrote down for you guys. Just remember these 4 things. IFVGs are only valid in the manipulation leg. A manipulation leg is the small zone of price that actually delivers into your PDRA, not the whole 15-20 minute range. It's just that small final burst of price into your PDRA. Not all legs are manipulation legs. Again, what I just said, not every zone that pushes up is going to be a manipulation leg, right? It has to be the small burst of price that sweeps your PDRA, and not all manipulation legs are the same. If we sweep a high, a random ass high in the market, and that gets inversed, that manipulation leg inversion is not going to be the same as if we sweep out London highs and a 4-hour gap. Because after that leg gets inversed, the chances are, and it gets flipped, the chances are it's going to deliver to at least the next internal high. So again, if you guys are just taking a random manipulation leg off of a random low, that's not going to give you the same result as if you wait patiently until we are delivering just before London highs, we open into London highs or lows, sweep it, and then move. And most importantly, inversion fair value gaps take place on the 30-second chart, on the 1 minute chart, on the 2 minute chart, on the 3 minute chart, and sometimes on the 5 minute chart. But you'll know when it's on the 5 minute chart because it literally looks like it's on the 1 minute. It's not, we pushed and then we did this and then we did this, and then this 5 minute gap that was holding everything up just gets flipped, and like that. This is not what your 5 minute inverse is going to look like. It's going to look like this, right? We're going to deliver up for 5 minutes straight, and then we're going to deliver down for 5 minutes straight. and there's just no real pullback into anything that tells us that we stopped manipulating. We just straight up push, 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 pull, 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 straight back down. That is a 5-minute inverse. But even here, it's not, because we still have this. So literally a 5-minute inverse is going to look like this. On the 1-minute chart, a 5-minute inverse is just going to look like that. Just straight up, just candle after candle after candle, up, 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 and then candle after candle after candle down. Because if we start pushing into making retracements like this, these are all new manipulation legs, right? Each of these swings higher manipulated new liquidity, right? This leg swept that high, this leg swept that high, and so on. And the only time you guys are going to use a 5-minute inverse is when it really just flushes up for 5 minutes straight and then flushes straight back down, canceling out the whole range for 5 minutes straight. And then please don't enter off of 15-minute inversions, 30-minute inversions, 1-hour inversions. We're only using higher time frame inverse fair value gaps to understand where price overall is trying to deliver to. It's not about now the 15-minute inverse, so now you put your stops at the high and just go short. No. Once the 15-minute inverses, you wait for us to form bearish structure, maybe a 5-minute gap, retrace into that 5, and then you take the 2 or 1 minute inverse fair value gap out of that 5 minute. You don't just enter off the 15-minute inversion. So yeah, boys, hope you guys took lots of notes, and I hope you guys come back to this video, because this was actually a saucy one. Like, this is something that if I was told this 8 or so months ago, if someone just came, looked in my journal, looked over my shoulder, was like, buddy, you're doing this wrong, I think I would have probably been a lot further than I am now. So I just hope, even if it's one of you guys, I hope one of you guys just looks at this video and is like, oh, that changed everything, bro. That's why I've been losing. Thank you so much, Soran. So yeah, appreciate you boys, and I also appreciate all the support I've been getting recently, and much love.